Today, I want to talk about investment goals, setting them, giving you some ideas on what would be good as a goal for your investments and things like that. You don't want to just invest for any goal in particular. My name is Nate Gratian Show. Thank you for joining me today. If you haven't subscribed already, I encourage you to subscribe. Thank you to all those who do. We talk about investment and real money and real finances for real people. Um, so let's talk about investing goals. If you are going to invest with a goal in mind, it's important that your goal is at least 3 years away. And the reason I say that is because once you um, once you put money into an investment, the movement in the stock market, the longer it's in there, the better chance of a positive outcome from your investment there is. It also gives you time to just dollar cost average. That means just to consistently put out of each paycheck into your investment and see the returns and the compound interest to work. If you're going to save for something that's less than 3 years, 1 or 2 years away, maybe, I don't know, a trip or a vacation or something like that, it's worth just putting it into a savings account or an offset account or something like that, okay, that you can access easily. Um, but if you've got something that's a bit longer term, 3 years plus, um, putting it into an S&P 500 that tracks the top 500 companies in the US, or an ETF that tracks the US market or something like that would work well. Now, some ideas of what this would look like, and you're going to see a theme that run through each of these. One would be real estate. If you're saving up to buy a house, either for yourself to live in or as an investment property, this could be a good goal where you would invest money. And when you've got the deposit, or you've got a good chunk there, you may pull it out and invest it into real estate. Another may be college, either for your children. We are investing for our kids' college, or for further education for yourself at some stage down the point. You may not know what it is right now, but maybe down the road you would like to study something. You may not know again what it is right now, but you enjoy studying. Just setting something aside, and who knows, when you're 4 or 5 years down the road, you may see something and think, yeah, that's good. I'll study that. The other is a business. If you've got this business idea, now this can be a little bit different, but with the business, investing for the future of the business would be good, but also start doing what you can with the business. Now, it may be something like a YouTube channel, or it may be something, where start working towards that now. There's a lot of things you can do that doesn't cost you anything. I'm using a phone right here. It doesn't cost you much, and you can get things started, and then 4 years down the road of consistency and working on the business, you may have some funds there that you've invested and you can pull from. And the final idea is, of course, retirement. It's much longer term. Okay, so retirement. Now, the theme that runs through all of these is it is assets. It's things that are your notice. Vacation isn't on here. Notice a car isn't on here. Now, a car could be on here, but that's something I would say, if you are saving for 5 years to get a car or something, cool. That's awesome. But you'll notice most of what's on here when you're talking those 3 years plus goals, most of what's on here is asset driven. So it's not things that's going to decline. So in reality, what you're doing is you're actually taking the funds out of your investments in an S&P 500 or wherever. You're taking them out of the investments and you're investing it through a different engine. You're investing in real estate. You're investing in knowledge. You're investing it in a business. You're investing in retirement. And so it's actually just taking it out of one and you're still investing. It's just changing the engine. It's just changing what you're investing in. And so And so that's one of the strong points with investment goals. Oftentimes, if you're putting funds into your investments, it's not to necessarily just pull out and watch it disappear type of thing. It's you're going to put those funds elsewhere that oftentimes will diversify your investment even more. Again, I encourage you, if you are thinking of investing in for to start a business, I encourage you start what you can now. Next step, we're laying this foundation, but the next video we're going to talk about risk in your investments, how to find your risk level, your risk score, and how you have a lower risk, or if you got a bit more risk tolerance, you can increase that risk and what that will look like. But thanks for watching again. Follow along, subscribe if you haven't already, and thanks for all the support, guys. And we'll see you in the next video.